For remaining with us here at Smart 24, why we drive your business. My name is Anthony Sebale, and I'm your host for Financial Markets. Remember, you can catch our conversations on Twitter, Facebook, and of course, other social media platforms as well, of course, our live stream on YouTube. But remember as well, we are on Smart 24, channel 394 Go TV, of course, for those with Go TV decoders, as well as free-to-air decoders. So you can catch more of all these shows and get to know what's happening in the world of business around you and, of course, with your business involved. Now, on our top stories, amongst our top stories, Kenyatta, of course, Mahmoud talks clear way for Miraa trade flights resumption. Now, Kenya will resume export of Miraa to Somalia in 2 weeks following a thawing of the relations that saw President Uhuru Kenyatta make his first trip to Mogadishu Thursday since the renewing of diplomatic ties between the two countries last June. Kenya's Agriculture Secretary, Mr. Peter Munya, said that Mr. Kenyatta brokered the deal with new President Hassan Sheikh Mahmoud last Thursday that will see the lifting of the 2-year ban. Mr. Munya said the export of crop mainly grown in the Meru County would begin in a fortnight when the two heads of state signed a formal trade agreement. That is, of course, after quite some wrangles there with Miraa traders have been restricted in terms of trade. Now, the minister also announced that direct flights between the two neighboring countries would resume from next Tuesday, a move that would enable that crop to be flown directly from Isiolo Airport. And of course, a bilateral air service agreement would be signed on the sidelines of the Intergovernmental Authority on Development, IGAD. That is a meeting slated for Tuesday this week in Nairobi, as he mentioned. Now, addressing the press outside the Kaliati dispensary in Tigania, West Meru County, when he started a 2-day regional tour to local farmers. Mr. Munya said the new Somali regime had promised improved diplomatic relations. He also said that trade talks were cemented after the Kenyan delegation in which he was part, led by, of course, President Uhuru Kenyatta, attended Mr. Mahmoud's inauguration in Mogadishu last Thursday. Now, he said, Mr. Uhuru, and I quote, "We want to thank President," actually this is Mr. Mahmoud during his inauguration as the President of Somalia, and I quote, "We want to thank President Uhuru Kenyatta for the diplomatic negotiation he has been carrying out quietly, and the ban he had greatly affected, of course, the economy of Mount Kenya East and farmers' earnings." Mr. Munya said the talks were complete and what was remaining was the signing of an agreement that will also see Somalia sell seafood and other produce to Kenya. Somalia closed access to its market for Kenya in 2020 following a political fallout between the two countries under the former regime of Mr. President, of course, Mohamed Abdullahi, of course, Farmajo. And the ban led to a loss of more than 50 tons of Kenyan cat, valued at more than 20 million Kenyan shillings, that is 171,000 US dollars a day. Mr. Munya underlined the importance of the Somalia market, saying it is lucrative and serves as the launching pad of cargo exit and transit to the Horn of Africa and the Middle East, of course, and other countries. That is something, of course, right there we are seeing that is developing. The relationship between Kenya and Somalia is improving as borders are opening. We see this affecting the financial markets in a way that financial markets don't work, in a separate docket. Whenever there is no trade between two countries, the companies that are listed probably do business in those countries. Take a look at, for example, if at all Rwanda, when Rwanda closed its borders, and of course we had maybe a company like Cipla that was making drugs, And they are finding difficulty in probably exporting the drugs to Rwanda because the borders are closed. Maybe they have to use air, which is quite more expensive than probably road. This will create high, product, prices, which may lower the demand. Now, when the demand lowers for products, the profit probably made by these companies will reduce due to maybe loss in revenue. And this results into, less profits for the company, less or even no dividends for the shareholders. And this affects the entire economic, space, the entire financial market space. That's why relationships between countries are quite important when it comes to financial markets. We can never trade with each other if we are at loggerheads with each other. As you can see, we have cross-listed companies from Kenya. Kenya has cross-listed companies on its exchange, as we shall see later on, from Uganda. So if Kenya and Uganda don't harmonize in terms of trade, these companies will find issues and people probably will not find them attractive in order to buy shares from them. But we see, at least if the Somalia and Kenyan economies are coming together, to trade in such simple things as miraa, we can see more trade happening in terms of other things besides the crop produce. And this will help as well in the growth of our financial markets. And of course, that is one of our top stories right there. If you can follow that conversation, hashtag financial markets, and give us some feedback, that would be quite handy. Moving on to another top story, the first USSD enabled securities trading platform has been unveiled. Now, the OTEX East Africa, a securities exchange platform with operations in Uganda, has unveiled its new platform called Zabu, which it says is the first East African USSD-based trading platform. The platform will offer individuals with the ability to register and invest in financial products without needing to connect to the internet or needing to travel. The Zabu launch, of course, that was happening at Golf Course, according to the OTEX trading company, will also offer individuals an opportunity to become active participants in, of course, the securities market and respond directly to the challenges of access to the internet as a barrier to securities investment in the country. It will be supported by MTN, that is the MTN network, as an innovative platform enabling investors to access the OTEX securities trading environment. The innovation is built on the USSD technology, and MTN Mobile Money is meant to give everybody with an MTN SIM card access to the opportunity to become a securities investor with OTEX. Now, Mr. Joseph Chitamirike, who is the OTEX chief executive, while launching the platform last week, said that majority of investors on OTEX have actually no previous experience in investing in, of course, the securities market. And Zabu intends to end this access in a partnership with MTN, whose millions of subscribers will be able to trade on the securities market. Now, of course, in Uganda, he said, we are told there are more than 25 million people with a phone. If you could stop for a minute and estimate, of course, the number of people with a mobile phone in Mitoma district, for example, all of them now have the opportunity to participate in the securities market. That is according to Mr. Joseph Chitamirike, who is the CEO of OTEX East Africa. Now, OTEX East Africa currently offers Ugandans and Kenyan government, currently offers Uganda and Kenya bonds, government bonds, as well as Tolea Exchange Traded Fund, which returned 20% in its first year on the market. Mr. Thomas Tayebwa, who is the Deputy Speaker of Parliament, who graced this function as they launched the Zabu initiative, actually also attended the launch and said Zabu could be an accelerator of financial inclusion and economic growth in the country by addressing the barriers of cost and time. It could be a vehicle for the financial freedom of millions of Ugandans in the country by bringing investment opportunities closer than ever before. Of course, Altex launched the commercial operations of its exchange in October 2016 and has grown its market capitalization from 19 million Uganda shillings to at the end of 2016 to more than 33 billion today. On the other hand, Mr. Chitamirike also said that the custody business has grown in volume from about 20 billion shillings in 2019 to about 445 billion shillings in 2021. And of course, this presents a lot of investment opportunities across the country. I was on this function as they launched the Zabu initiative, and very many people were excited. Of course, the CEOs of Altex East Africa and Altex Clearing coming together to see this initiative come to pass, and the function being graced by, of course, the Right Honorable Deputy Speaker of Parliament, Mr. Thomas Tayebwa, who actually, commended Altex for bringing business closer to the, common Ugandan. And this is exactly what we are talking about on the program. This investment doesn't have to be for the rich. It doesn't have to be for the wealthy or those who can access the internet anymore. With just simply your small mobile phone, the button phone, you dial *292 hash, that is using MTN, and you already have access to this vast opportunity of investing in the stock market. Remember, you may need a few, people to advise you here and there, but those are stockbrokers, and probably Altex also has this provision for you to actually get education, get to know where can I invest, when can I invest, when can I pull out my money, and all that. But the app is creating, not the app, the initiative Zabu is creating an opportunity for every kind of person in the world, in the country, to invest, so that they can participate in the investment of the country. Remember, it's simply dialing *292 hash and you're there. That is all it takes. And this is convenience at its best. So we really have to applaud Altex East Africa and of course Altex Clearing for coming up with this means of accessibility to the stock markets. Remember, you not only get access to these stock markets of Uganda, but also other East African nations like the Nairobi Stock Exchange, which is the strongest stock exchange, the Dar es Salaam Stock Exchange, the Rwanda Stock Exchange, and the like. And you get to trade on all these, exchanges conveniently with your small phone. That is what we are talking about on the program. Convenience at its best. And of course, remember to invest residual income, not the income you need daily, because many people make the mistake of investing their money, which they are using today, and they want to pull out the next day with losses. Because as you can see, these reds indicate falling of several prices. And so there are losses involved. It's not all green, yeah? But of course, there are some greens as well. And these greens take patience sometimes. Sometimes it takes time for these companies to pick up, yes? So before you invest in the stock market, have patience, invest residual income. Don't invest the income you rely on daily. You will end up in losses. That's being brutally honest, because the stock market is a very volatile market with a lot of turbulence in terms of share price, in terms of companies, gaining and losing on the market. It's a brutal game. Trust me, it is. And you don't want to lose your money just like that. So put in your capital, put in your residual income and keep quiet, like the saying goes. And we see what happens next for you there. That's something we shall follow on later. Remember, we had an interview with Mr. Jetin as well, who's one of the co-founders of Altex. He was explaining how they got motivated to see this. I think my producer will get me that later on in the program. But you will see how they got motivated to actually increase accessibility to the stock market through using a small mobile phone. It was their dream, not because they were gaining much, but because of the passion they have for investment and people getting to learn the game of investing and bring it down from the top big dogs down to the people in Kamocha, down to the people in Mitoma district, and you who is seated at home watching me right now. So it's a beautiful thing. Next, on our top stories, Centum Investment Company has mulled a treasury bond to boost cash flow cover losses. Now, Centum Investment Company is considering reinvesting proceeds from the sale of its shares in Sidian Bank, of course, to the Access Bank of Nigeria, which is the biggest lender, one of the biggest lenders on the market here in Africa. It's considering putting those gains to reinvesting those gains into treasury bonds in an attempt to recover losses incurred on the transaction and improve cash flows. Remember, investment in treasury bonds and bills can be for individuals, but as well it could also be for institutions and companies. So Centum is an investment company. Literally what it does is investment. And they are considering using the profits they earned from selling off the biggest share of CDN Bank to Access Bank of Nigeria into investing them into treasury bonds in order to recover from the losses they have made over the last few years. Now, last week, the firm, which is listed on the Nairobi Stock Exchange as well as the Uganda Stock Exchange, announced that it has sold 83.4% of its shares in CDN Bank to a Nigerian lender called Access Bank PLC in a transaction valued at 4.3 Kenyan billion shillings or 37.06 million US dollars. Now, the deal could be viewed in two aspects. On one hand, Centum gained considering the market value of the third tier lender had fallen to, of course, as low as 2.7 billion Kenyan shillings by September 2021. But the proceeds from the share sale compare unfavorably to the initial investment of about 4.7 Kenyan billion shillings, and of course translating into a loss of about 400 million Kenyan shillings or 3.44 million US dollars. Of course, they never made a gain against the original investment, so they actually have been an issue of value recovery. The option they had was to actually stay on board and put in more capital or exit and get back our capital, of course their capital, and redeploy it into other investments. That's according to the group's Chief Executive Officer, Mr. James Moria, as he was talking to a certain newspaper in Kenya. Now, every year, they are required to revalue the bank. The revaluation, of course, was not tied to cost. It depended entirely on the market as it is and what the share value of the bank was. So at the end of March last year, that is the year 2021, they were carrying it, that is CDN Bank, at exactly 2.4 billion Kenyan shillings or 20.68 million. And then at the end of September, they were carrying it at about 2.7 billion Kenyan shillings. So when the revalue of the bank was below the cost, that goes through your profit and of course loss account. Now, they have very good assets, but they are not generating cash. So they want to exit from those assets at a premium to more cash generating assets, as he added. That's according to Mr. Moria, who is the CEO of Centum Investment Company. Now, Centum acquired CDN Bank, formerly that is the K-Rep Bank, that's the Kenyan Republic Bank, in 2014 as part of a basket of its private equity investments, as the group pursued acquisitions that could guarantee high returns for shareholders. But the bank has not lived to its expectations by failing to generate dividends for the past 7 years. CDN Bank was not a good asset, according to the CEO. It is growing, but it is not paying the dividends, and it is not contributing to the cash flow of the company. So our strategy has been, of course, this is according to Moria, Mr. Moria, has been to improve these kind of assets, exit them, and deploy the capital to more cash generating assets, according to Mr. Moria. So Centum Investment Company just simply looks for a company that is promising to grow. They get this company, and they, of course, using a strategy, they improve its assets, and of course improve and expand the company, and then exit and redeploy the capital to more cash generating assets. This is the strategy they had. He said that the objective is to boost cash flows through, of course, opportunities in the bond and stock markets. And of course, he said that we know that the valuations have come down, and so there are a lot of opportunities in the market. Among Kenya's firms exiting the PE portfolio, companies are CDN Bank, Isuzu East Africa, Longhorn Publishers, NAS, Savair, and S Holdings. In 2019, Centum completed the sale of beverages companies, Almasi Beverages, Nairobi Bottlers, and King Beverages Limited, and realizing total sales proceeds of about 19.6 billion Kenyan shillings. Last year alone, the firm said it had taken a cautious approach in venturing into the new businesses, and of course was preserving capital in government bonds to cushion against a volatile operating environment that pushed it into loss-making territories. Now, in 2020, Centum increased its investments in the government securities to about 7.5 billion Kenya shillings. That's about 64.65 million US dollars from about 4.1 billion. That is about 35.31 in 2019. That is about 50% increase in investment in treasury bonds and bills. During the 6 months of to September, that is September 30th, 2021, it reduced its loss to 5.7 million from 17.06 million in 2020, helped by a decline in finance costs. That is Centum Investment for you. Centum Investments, as you can see, company listed here, doing very good on the market with a gain of about 4.5, currently trading at 418.2. But of course, currently it's been struggling with CDN Bank. So I decided to sell off CDN Bank to a Nigerian Access Bank, which is a Nigerian lender, but also a big lender here in Africa and in East Africa. And now they are currently saying we want to invest more into the safer investments like the treasury bonds to recover some of the losses. Because as you know, as you sell some of these assets, you may not get as much as you expected at the end. So they are looking at gaining, the gains they have got from selling all these assets, investing them in treasury bonds and bills. And this is the game that we shall see how it plays out at the end for Centum Investment Limited. You're still watching Financial Markets. My name is Anthony, and we are still breaking down top stories, making headlines in the East African financial markets. Don't go anywhere. We'll be right back.